Hey folks, Dan Frio here, the rate update. I figured I'd start doing these live so you guys can see what I do on a daily basis when I first walk into the office. So this is a constant learning curve. So it's nothing you're gonna pick up just overnight. So let's go into my morning when I walk in. What am I expecting to see? And just because the news the night prior to was X doesn't mean it actually transformed over to the next day. So let's get over to my day. So let's start over here when I'll get my head out of the way. First of all, if I come in and see what's going on in the MBSs, I know on this one, you can't really see the greens. All you see is the reds down. So I will use this form here. So I come in and I look at what's going on with the MBSs. It's like looking at the Dow, what stock market's doing. So I look at this and it's like down 34, holy shnikes. What's going on? Okay, so why do we focus on this? This right here is what's going on with the MBS market. Okay, the MBS market is a bond that trades on Wall Street that determines or is the biggest factor in your mortgage rate. So when this number here goes down, mortgage rates go up. It's the best way I can explain it. There's an inverse relationship. This number down, rates up. This number up, rates down. So what I use is this tool right here, and it is live and it gives me a ton of data, but you can't see a lot of the green in through here because of my backdrop and my green screens. But you can see there's stuff all over the map that's telling me kind of what's going on in the markets. In my office, if you saw behind the scenes, I got 3 monitors going. And one has this going on all times, one has other feeds going on, one has emails and so forth. So this is my backdrop here. Then the next thing I go, economic calendar. Did something come in that I just missed, or what's coming up tomorrow? This gives me a little crystal ball, what's going on for the week. So let's go down through what's happening this week because I want to figure out why we're down 34. All right, so on Tuesday we had manufacturing numbers came in, they're okay. The JOLT number, this number right here, this is the number of job openings in the economy or in the country. We have almost 11 million job openings. There were supposed to be 10.3. Well, that's already baked into the cookies. So yesterday, we had ADP non-farm employment change. They expected 207,000. It was 301 negative. Ouch. Okay, so how is the employment numbers robust when we're not growing here? Initial jobless claims, they're a little bit less than what was expected. Okay, but right here, there's a disconnect. There is a ton of job openings and nobody filling them and people continuing to quit. I don't get it. Okay, so if you have comments, please comment down below because I would love to fix this disconnect. I understand where people are retiring and things like that, but guys, your bills don't stop. You need to keep paying bills, and if the wages, where you're working aren't enough, then you start looking for other jobs. You can't just sit at home. I'm missing something here, so please fill me in. Tomorrow, we're going to have the payroll numbers, non-farm payroll numbers, and the unemployment rate. It's expected to be 3.9. This is another number. I don't get it. If we have 11 million job openings, people not really going back to work, and people continuing to file claims, then how is the the jobs number this good? It doesn't add up, folks. Okay, so then I go to the stock market. What's going on in the stock market? It's down, Dow down 200, S&P down 300. Well, the S&P is down 300. A big contributor to that is Facebook. Facebook is plummeting. I don't know if you like Facebook or not, but it's your own prerogative. Weekly jobless claims, you continue to see that. Let's see weekly jobless claims. Weekly claims total 238,000, fewer than expected. Okay, we'll go with that. Mortgage, and then I go to here and I start seeing where are rates and so forth. So this is then where I pull in, where are rates today? So let's go over where rates started today. These are not my rates. These are the national average, just so you guys get it. So we start here at the 30-year fixed. Okay, so you can see that 3.66, it's down 0.03. We call it 3 basis points. Okay, so that means yesterday we were at 3.69. Next line down here, I hope you can see it. It's 2.78 to 3.74. That is the yearly or the 52-week high and lows. We are close to the highs, but we're down from the highs, okay? Another thing that I wanted to point out the other day is this is really hard to see, and I don't know how on live to do this to Zoom, but at this rate, we got 3.66, and it says below 0.4 in points. That means you're gonna pay money to get that rate. So what is the rate or the true rate if you didn't have to pay any costs? probably 3.7 to 3.8. Okay, so we're teetering on that 4% trigger that I keep talking about. The 15 years, 295, down 1 basis points. Again, you're paying down or paying money to buy down that rate. So that rate is in the threes for sure. The 30-year FHA, and I'll say slash VA, is 3.38, no points. Okay, so that's what we want to see. I want to really see. So I'm digging in to try to see if I can find you guys how I can post this without points or paying down anything. 30-year jumbos at 3.33, and the 5/1 ARM is at 3.64, paying a half a point. It is down 1. We have a special program that's a 10-year ARM that is normally beating the 30-year fix pretty good, and it's good for 10 years. Most mortgages are only out there for 7 years. On average, throughout the whole history of mortgages, mortgage rates have been, I just lost my train of thought. You know where I'm going with that. Okay, so most mortgages have only been activated for 7 years, maybe 9 years. So 10 years is a good option there. All right, so then we go to Dan. How can we reach out to you and your team if we need some help? Okay, so what we're posting today, later today, I'm doing a lot of research in why I think inflation is transitory. And I had a bunch of data ready, and then I had to reboot my computer and I lost it. So I'm not starting over, but I know where I'm at from there. And then the housing market. What do I expect from the housing market? Is it a bubble? And I'm going to show you how, why, and where, and when. Why I don't think it's a bubble. The supply and demand. The demand is there. The supply is not. And I'm going to also show to you guys how foreclosures and forbearances really hurt the markets in regards to pricing. So I hope you like my video. If you do, please give me a thumbs up, subscribe down below. But if you want our help, the best way to get us is just right here. You can give us a call, 844-775-5626. Or there's a button up here, right here. You can schedule a meeting. What happens is you click that, it opens up a calendar, gives you all the days and times we have available. You click the time and the day that you want, and then we'll make sure we're there to answer any and all questions that you have. If you're like, hey man, I just want to get the ball rolling. I trust you guys. I need to close. I need to refinance. My basement's getting finished. These bills are driving me nuts. I got to consolidate everything into one. How do you do that? Just click the apply now button and you're on your way. Once you finish, it's going to take you maybe 5 or 10 minutes to complete it. Do the best you can, okay? Then based on the answers to your questions, what will happen is at the end of your questionnaire, it's going to say, hey, based on the answers to these questions, we need you to upload this. And it's going to give you a list of documents to upload into a secure system. It'll feed right into us. Then we can review that. We can actually review that when we have you on the phone or on a Zoom when we're going over your mortgage application. So thanks so much for watching. I'll be back later this afternoon with some good news. And people, I'm going to answer a lot of questions that I'm getting on Facebook later this afternoon. Basically, it's going to be an FAQ session for you guys. So God bless, guys. Thanks for watching. Have a great day. Stay warm out there if you're in the Midwest or wherever. We got about 20 inches of snow last night, and that's why I wasn't here. So I'll see you later this afternoon. Take care.